Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how you guys can build a solid strategy. We're going to be talking about tips and tricks, and we're going to be showing you guys my strategy so you guys can pick bits and pieces from it so you guys can build your own. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. If you guys want to learn how to find some of these stocks in opportunity, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. We talk about how to, go about setups, entry points, risk management skills, psychology. It's just taking your trading game to the next level. So check it out down below, and you guys can get 51% off by using code SPRING25 for a spring sale. So check it out down below. I'll see you guys in there. And guys, let's jump into this. So here's the thing about having a good strategy. Having a good strategy is by far one of the most important things you guys need to have as a trader or investor in the market. You guys could have the best stock. You guys could have the best software, the best broker, the best scanner, the best trading computer. But if you don't have a solid strategy for your entry points, your exits, your risk management, you're going to lose money. And at the end of the day, what are some things you guys need to do beforehand? Beforehand, you need to figure out what type of trader you want to become. Whether it's a day trader, a swing trader, or just, in my opinion, an overall trader is definitely someone that can do a combination of both. But hey, it's better to learn one and be an expert at one type of trading strategy. And then as you grow in the market and learn more and more and more, then you guys can evolve. I've recently just picked up day trading a little bit more than usual just because the volatile markets, having these market conditions that swing very, very, very fast, but I don't want to carry the risk of holding a position overnight, then yeah, I am going to just day trade. But having good strategies in your back pocket is very important. So figure out what type of trader you want to be. The second thing you need to understand is trading is not easy. It's not a get rich quick scheme. It's not, anything like that. There's no trader that gets rich quick. Yeah, you can get lucky a couple of times and grow an account, but I'm telling you, if you want to be a trader, if you want to be a full-time trader like myself, you have to understand the long game of trading. It takes a minimum of about 2 years before you guys see some sort of profit, right? You've heard those statistics, I'm sure, of 90%, 85% of traders fail. And yeah, it makes sense if you actually think about it. 90 and 85% of businesses fail. And the businesses that succeed have a business plan, right? Those ones that fail often don't. They just go into business because they think it's an easy way to get rich quick. And so you got to have that same approach, right? The next thing here is you have to understand your type of trader, right? We're all different people. We all have different personalities. So maybe a strategy that works well for you might not work well for me, and that's completely fine. So just kind of pick bits and pieces from today's video so you guys can kind of get a general idea of trading. So all right, step number one, or step, what are we on? I don't even know. But the next step here is to have a good broker. The broker I use is Moomoo. I'll put a link to them down below. You guys can get up to 30 free stocks just by signing up. But having a good broker is very important because this is how you make money, right? You don't want a bad broker. You want a broker with every tool under the sun, right? You want a broker with AI tools, drawing tools, charting tools, scanning tools. You don't want to ever try to trade and be like, oh man, I wish my broker had this. So that's why I use Moomoo. So check them out down below. But all right, what's the approach? So going ahead and pulling up Moomoo here, the first thing I have on my strategy is very, very simple. Is a stock on an upward trend, right? And this is a position that we recently took, was ticker symbol GILD. This was a little over about 2 weeks ago, but we covered really, really nice profit on it. And honestly, like I've said, we've been day trading a lot more than normal just because of the volatile market. So this is more of a swing trading approach. We'll show you guys another day trading one hereafter. But the first thing here on my checklist is trends. Trends, in my opinion, are probably one of the most underutilized things traders don't pay attention to. A lot of new beginners think that it's better to find a stock on a downward trend because you can get it at a cheaper price and it's going to magically recover. When in reality, often it's better to find a stock on an upward trend that has sold off down to some level of support. And this brings me to my second thing on my checklist is support. Support could be a variety of things. It could be a certain moving average line, like this right here, this yellow line here, which is a 50-day EMA line. It's a moving average line. We can see in the past where it hit it, we had buying pressure, hit it, we had buying pressure. A little bit in here, right, where it hit it, we had that good little curl up. So there's a minimum of 3 touches of support, and that's exactly what we saw. As the stock sold off down, we got an in, I'll be honest, near and around 109. So yes, we definitely could have gotten lower, but you'll never buy at the peak bottom and sell at the peak top. It's literally almost impossible here. So after this here, the next approach here and the next thing is to look at another indicator called the RSI. The RSI here stands for the relative strength index. And at the time, it was trading for about a 38. The last time it was trading for a 38 was back in this range where it hit that same 50-day moving average line, which is that yellow line. Now, you might be wondering, Carter, what are the difference between the yellow, blue, and red? Well, the yellow is the 50, the blue is the 90, and then the red is the 200. The higher up you go, the harder the support is going to be, and often harder the resistance. So when the stock is trading above it, like it is up here, trading above the lines, it's going to have tendencies of acting as support. But when the stock sells off down below it, it could see it and hit it as resistance, right? As you guys can see. So ideally, you want to buy it when the stock's above it on that good upward trend. All right, so let's go through this again. We have a stock on an upward trend, sold off down to a moving average line, and it's undervalued on the RSI. Often, you could look for a nice little volume spike, which is exactly what we saw down here. You guys can see where it was just kind of flat, 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 boom, buying pressure. This represents a huge number of buyers and a possible entry point for a reversal. All right. So the next thing here on my list here is going to be looking at other time frames. The last thing you want to do is enter the position, on that 50-day moving average line and just see it continue to sell off. So you want to go to like the hourly time frame, okay? And this is the kind of the trend that we saw where it was just selling off down below all these trend lines, boom, boom, boom. And as the stock popped up, this is kind of where we got in, was near and around about the 108, 109 area. So going ahead, putting those moving average lines back up, we got in above these moving average lines for a new trend reversal. Okay, so now since the stock is above that trend, we have that trend reversal. And it formed a new trend line like such. So got in on the trend going up, and now look at this new trend line going up and up and up and up. And as the stock broke through this support here, this is where we kind of covered our profit for about 111. Now, return wise, honestly, it was only about 4%. But hey, if you guys can make 3% per month, you are already in the top 5% of traders in the entire world. And another thing, I'm somebody where I've been trading for a decent number of years now, 7 years. So I do have a little bit of a larger account where a 4% return in 5 days is easily over, $400 or $500. So I'll take that any day of the week. Another stock here that we took a position with, and this was actually a day trade. So I'll kind of show you the main difference here between a swing trade and a day trade. So looking at this here, same little approach here, stock on an upward trend, sold off down to a different moving average line. It's actually going to be that 90-day moving average line, as you guys can see. So that blue line, undervalued on the RSI. Now, one of the things here is we did not have a huge volume spike down on the bottom, which ideally you do, but it's not the end of the world here. So the next thing I do is I go to a lower time frame. But for swing trades, most of the time we really pay attention to, the hourly. We pay attention to the 4-hourly chart. And you guys can see here where it was just kind of on this general downward trend like such, okay? So now here for a day trade, I wanted to get in and out of this position because we are seeing so much volatility. The S&P up, 5%, down 5%. So it just swings very, very fast, and you just kind of want to ride that wave of the momentum. So I went to the 5-minute chart. I went to the 5-minute chart here, and one of the things that I saw was a very, very similar approach here. Now, looking at this here, we got in, right? we got in on that breakout here. You guys can see that little dip down in the first push. This is what we call a flag. So going to a lower time frame, right? Like the minute chart now, because since we're in on this position for a couple of, hours here, not couple of days, we use lower time frame. You guys can see that nice flag right here popped up. And now here, as it broke up above this new trend line, this was our entry point. So it's very similar to swing trading, but just using other time frames. Now it popped up, we continue to hold here, and we just kept moving our stop loss, right? So our stop loss was originally here, and we kept moving it up, up, up. And as it dipped down here, we got out before market close. So return wise, let's go ahead and break it down. This right here, about 6%. And hey, what do I always say? I will take that any day of the week. And that's the approach you need to have, right? Trading's not easy. It's not a get rich quick scheme. It's just using other time frames, drawing tools, moving average lines, RSI lines to your advantage. There's a whole bunch of indicators that work very, very well, but this is a simple setup, simple strategies that you guys can use to start making money. But honestly, if you're just getting started, just focus on learning, focus on paper trading, check out our school. And guys, exciting news, we do have new merch coming. So I'll put a link to that down below where you guys can get your first Carter Farm merch and code dividends for 20% off. Shh, don't tell anybody, but I'll see you guys in the next one. Hope you guys enjoyed it. Smash that like button, subscribe, and we'll see you guys. Take care.